Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Endeavor stock by analyzing their financial statement and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 8.4 billion market cap. They're trading at $27 a share, and they have 300 million shares outstanding. Endeavor operates as a sports and entertainment company in the US, the UK, and other countries. It has a portfolio of sports properties, including Ultimate Fighting, World Wrestling Entertainment, Professional Bull Rider, and EuroLeague. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They do have positive free cash flow each year. It does move around a bit. It was $230 million in 2022, up 50% into 2023, down 56% into 2024, but it's up over 100% in the trailing 12 months. Net income is the profit or loss on the income statements, revenue minus expenses. That's also a little volatile, negative in 22 in the trailing 12 months, positive in 23 and 24. Revenue is a sales for the company that has a nice steady trend up from 5.1 billion to 5.3 billion to 6 billion to the highest ever 6.7 billion in the trailing 12 months. They do pay a dividend, 87 basis points, which they can cover nearly 5 times with their free cash flow, so maybe they'll raise it. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 16 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $13 billion. We divide that by 300 million shares. And we get a calculated stock price of $43. They're trading at $27, so they're trading at a 36% discount. It's a buy according to the model. Do you think it's a buy or sell? Let me know in the comments. Simply Wall Street is really bullish on this one. They're at 97 a share. They say the stock is 72% undervalued. There are not any analysts pricing this stock. There are 42 companies in the same industry as Endeavor, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a good amount in CapEx, 200 million. These are the investments in property, plant, and equipment. Debt to equity ratio of 1.2. For every dollar of equity, they have $1.20 of debt. Their dividend is a little shy of 1%, which is equal to the average. Free cash flow of 349 million. It's higher than Roku. They rank 11th in market cap, 8.4 billion. They're trading at 2 times book value. We can't look at that PE, negative earnings. They're trading at 24 times free cash flow, which is a better multiple than Netflix. And they're trading at 1.3 times revenue, which is equal to the median. They generate 6.7 billion of revenue, which is more than the sum of TKO and Roku. It's also more than Warner Music, and Warner Music is about 70% higher in terms of market cap. We can't look at their 5-year annual revenue growth rate. They have not been public that long. Here's their latest income statement. The second quarter of 23, second quarter of 24. Revenue is up from 1.3 billion to 1.75 billion. Cost of revenue, 740 million. SG&A is a little higher, 759 million. Then you have depreciation, amortization, 139 million. So total expenses, 1.6 billion, up a lot from last year. So their operating income is lower with higher revenue. It went from 150 million to 111 million. They spent 98 million of interest on their debt. Last year was 90 million. Last year they had a really big gain in other. That's why their net income was so high. This year, they don't really have much in other. 15 million of pre-tax income. They had a tax benefit of 140 million, so their net income is 155 million. That gives them an EPS of 20 cents. Last year, $1.33. And their shares outstanding are up about 3 million, from 301 million to 304 million. So to summarize, I have them trading at a 36% discount. It looks like a pretty good stock, ranking 7 out of 10. But I need to learn a little more about the company. I'm not too familiar with them. So would I buy it 4 out of 10? Average ratio is 5 out of 10. Really good financial, 7 out of 10. Free cash flow is up 49% since 2022. Revenue up 31% in that same time period. That's the end of the video. Give it a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.